Welcome everybody to Harold Park. My name is Stuart Panklis. I'm the Development Director from Mirvac who's responsible for delivering this project. So thank you for attending. Before I introduce Rob from CKC, I thought it was just important that I just give you a very brief overview in terms of the project, and then I'll introduce Robert Papaleo and he'll give you an overview in terms of the Sydney residential market, but with a particular focus on how the inner west market fits in, and more in particular how Glebe fits within those within the parameters of the market. From a Mirvac perspective, we've been developing residential, commercial, retail and industrial properties for over 40 years. We started off building 12 residential apartments in Rose Bay, and we're here today delivering 1,300 dwellings at Harold Park with an end value of about $1.1 billion. From a Harold Park project perspective, I suppose I'm not going to talk too much about the project. I'm just going to talk about the precinct and how much things are going to change over the next 18 months. Obviously, we're only 2.5 k's from Sydney CBD. We're sitting on a site that's about 10.5 hectares, and of that 10.5 hectares, we're going to be dedicating 3.8 hectares back to the City of Sydney as public open space. And that public open space will be linked into Bicentennial, Federation and Jubilee Parks. So connecting Glebe, Annandale and Forest Lodge to the harbour foreshore. In terms of the light rail, obviously, as you're aware, it's operational, but it's currently being upgraded and extended out to Dulwich Hill, and those works are underway, and they'll be completed by mid next year. So June 2014, we'll have an extension of the light rail out to Jubilee. In addition to that, they will be adding additional rolling stock. So from our northern portion of the site, where the light rail adjoins the site, during peak times there will be approximately 7.5 minutes waiting time between services. As I mentioned, the parkland, City of Sydney are currently going through a master planning process, and that master planning process is to design the embellishment works of the Harold Park portion of the new green corridor, but also re-master plan Jubilee, Federation and Bicentennial Parks to make sure that they're fit for the community, that they provide a whole lot of amenity for the local residents, the new residents, but obviously the people that travel from far to utilise these fabulous harbour foreshore parks. In terms of, just remember I just have a few slides to show you. So that's the 35% of the site which we'll be dedicating back to the City of Sydney. These are the harbour foreshore parks. And really, at the focal point of the entire Harold Park redevelopment are the tram sheds. And these tram sheds are over 100 years old, and Mirvac's just lodged a development application with the City of Sydney to convert and adaptively reuse these tram sheds for a hub, a retail hub and a commercial hub and a place to meet. And they sit adjacent to the light rail station and will really become the local convenience retail for not only the new residents of Harold Park, but the surrounding residents in Glebe, Annandale and Forest Lodge. I think with no more to say, I will introduce Rob Papaleo, from CKC, who is an independent researcher, and he'll give you an overview of the Sydney property market and more particular how the inner west and Glebe fits into that. So welcome to Rob.
Thanks, Stuart, for having me along, and thank you for attending this evening. Hopefully there'll be some interesting insights for you to take away for tonight. That's just me. Standard disclaimer, obviously this is not investment advice. I'm not here to talk about Harold Park. Got your Mirvac representatives to do that. I'm here just to provide an independent assessment of where I think Harold Park fits within the Glebe context and where Glebe sits within Sydney. Okay, so it's not investment advice, please. First point, when looking at any property market around Australia, I always start from the top. So I look at the city and then understand, well, how does this local housing market fit within that city? And the first point to highlight is that, obviously talking about Sydney. Now, Sydney is obviously Australia's largest city. It accounts for 63% of New South Wales' population and 80% of its economic activity. And Sydney really is Australia's global city. And if you break it down further, the inner part or the central part of Sydney, within which I suppose Glebe is located within, is actually the global city of Australia. We're not talking about places that are 30 or 40 kilometres away from the middle of town. It's the middle of town that puts Sydney on the map. You know, from a tourist point of view, as well as from an economic point of view, and from a lifestyle perspective as well. So to start from the top, I'm going to look through some demand drivers, what's affecting the market and shaping the market and suggesting where the future opportunities might be. Then we'll talk a little bit more around some of the supply factors, as well as some considerations within the inner west particularly. So first of all, on the economic front, I think we need to start off with the reality that the global economy still hasn't found its way out of the woods, and there is still some caution out there for justifiable reasons. The outlook is still a little bit patchy. Within that, though, it's been the same situation for the last 5 or 6 years. Australia has tended to outperform the other established or advanced economies. And really, for the first time in a long time, it can be said that New South Wales' economic prospects are actually better than the rest. We're actually doing okay in New South Wales. Certainly Perth has been at the front of the pack in terms of growth activity within Australia. But we need to appreciate that New South Wales is still Australia's largest economic region. It accounts for 31% of the national domestic output. New South Wales experienced 2.5% growth, which is okay. Australia's returning to trend in terms of its economic growth, around 3%. So it's doing pretty well. And New South Wales, like Victoria, is a highly diversified economy. So if one part of the economy is not doing too well, there are other parts that pick up the slack. The other interesting point about New South Wales is that its outlook is looking pretty stable, in fact. Victoria's a little bit shaky at the minute. Perth looks like it's hit its peak and still has a lot of strong momentum. Queensland is looking quite differentiated. Obviously the Brisbane City region has been impacted by floods and other things over the recent past, and the mining sector has hit its peak as well. But New South Wales has got a new government with a lot of energy and a lot of plans to do things better than what's been the case over the last 10 years. It's maintained its rating from a credit perspective, and there's a renewed focus on investment in infrastructure. And I'll get to the importance of infrastructure to a city's function in just a minute. Now, I want to look at, from the economic point of view, what that means for employment, because the connection is, if you have a strong economic situation, you have good employment prospects. If you've got a good economic environment and good employment prospects, consumers are confident. Their sentiment is up, and that has then a bearing on the housing market opportunities. And obviously Harold Park is a new development, but we're talking about the broader housing market here in Sydney. And this tells a good story. This tells a story that New South Wales' unemployment rate is actually the lowest of the major economic regions in Australia. Now tracking at a level of about 5.3%, Victoria's 5.8%, Queensland 6%, and WA is about 4%. So that 5 to 6 band is a key band, and it's a fairly strong recovery from being over 6.5% through the depths of the GFC. So employment growth in New South Wales has been positive, and it's the lowest of the major eastward states. The other important driver for housing demand is obviously population growth. If we have more people living in a spot, we need to provide more houses for them. And I'll get to this housing supply situation in a minute. But let's just dwell on the population growth as a driver of housing need. If we look at New South Wales overall, the current rate of growth is about 90,000 new residents in New South Wales in the last year. And that's made up primarily of, in the light blue, international migrants coming to New South Wales. They're attracted by the economic opportunities available to them in New South Wales. Okay? We've also got a strong level of natural growth, more births and deaths, and New South Wales continues to lead population to other states. We're losing about 18,000 people to other states, which sounds relatively high, but nowhere near as high as what it was only 10 years ago when it was losing 30,000 people a year. So the population growth outlook is pretty good for New South Wales. Then we look at Sydney itself as a city. And sorry, I haven't had a chance to update this chart, but the black line there represents the most recent population growth number. We're running at about 70,000 population growth into Sydney as a city in the last year, which is pretty close to its previous peak at over 75 when international migration was at its highest into Australia. So the population story is looking pretty good for Sydney and New South Wales. Now, I made a point earlier that infrastructure is important to cities, because for a city to remain livable, and let's face it, Sydney is always in the top 10 of whichever survey you look at. Some other cities in Australia might get ranked a little bit higher from time to time, but Sydney is always in the top 5, and it's only a marginal difference in reality. And the most livable part of Sydney or Melbourne or any other Australian city is always the innermost and centralmost part of that city. If you've got a livable economy, a livable city, you'll be attracted to knowledge workers who are skilled. If you're attracted to knowledge workers, you'll have a vibrant city centre. Then that makes for, it's almost a circular effect, a stronger economy in that central part of the city, which makes for a viable housing market. Okay? And they're the important connections between that. But if we don't continue to reinvest in our cities through new infrastructure, that livability gets undermined. We're now in a situation where New South Wales is renewing its infrastructure. So I think there's some upside to the housing markets that will flow on from that identified infrastructure. So if we then look at all the consequences of these drivers and what has happened to Sydney's house prices, we can see in the green line on the left-hand side there that Sydney has been a relative outperformer in the last 2 to 3 years. It had been an underperformer in the decade before, where I suppose the sun was shining in other states. But New South Wales, or Sydney in particular, has certainly turned the corner with strong growth, reasonable growth I should say, rather than strong growth. It's been reasonable growth. Despite the sort of economic uncertainty that we have experienced, it's still been moving forward. Coming off still a very high base, and Sydney is still the highest priced housing market in Australia, but for good reason, because the residents here are earning good incomes and they can afford to buy that housing at that price there. To me, if I was to look across all the Australian cities, Sydney is the one that stands out as having the best prospects in the short term. I think Perth, which has been experienced the strongest growth, has still got some momentum behind it, but its rate of growth is looking like it's going to slow shortly, off the back of the slowdown in the mining boom. I think Brisbane is still somewhere near the bottom, perhaps coming off the bottom. I think Melbourne's going to experience very low growth for a period of time. But Sydney, to me, looks to have some solid fundamentals underpinning its house price situation at the moment. And then if we look below the headline in terms of Sydney, where its median price overall is about 600,000, we break the city up into its different parts. We can see that the innermost part of Sydney has a median house price of almost $1.1 million. Okay? And the really interesting thing is if you look at the difference between the metropolitan median back in the early 1990s to the inner city median, the difference is about 35%, which is shown here. Roll forward, and now the difference in 2012 between Metro Sydney and inner city is about 80%, okay, which is shown over here. That, to me, suggests there's a structural adjustment happening to the housing markets within Sydney. Those places in the city which are most preferred by more people are experiencing stronger price growth in a relative sense. Okay? That sort of stands to reason. Those places that are most accessible to jobs and lifestyle are experiencing stronger demand, but there's a limitation to the quantum of supply that can be delivered within those housing markets. Demand and supply, pretty simple economics. Okay? From the further perspective, we need to appreciate that not everyone buys a house. And not everyone wants to buy a house. There's an increasing proportion of the population who actually want to rent, and for good reason. It gives them flexibility. New houses aren't being provided in the spots that they want to live. They want to be close to work, They want to be able to enjoy the lifestyle that certain locations offer. And renting as a form of housing tenure really represents a trading off between the cost of living, the cost of housing, relative to the benefits that a location delivers. So, excuse me, my voice is going here a little bit. There are more people who are prepared to live in a location in a smaller form of dwelling or a different form of dwelling because the location itself offers enough to offset the apparent disbenefits of living in smaller accommodation. It's more cost effective and it just suits their lifestyles. And what we are seeing in Australia is this structural adjustment to this aspiration of home ownership. Not everybody wants to own their own home forevermore. Our population is becoming more multicultural, more segmented, and accordingly our housing markets and the way we choose to live in housing, I think will follow those trends in a structural sense over the medium to longer term. And we're seeing that play out now in the vacancy rate. Vacancy rates in Sydney have now been below 2% since 2006. And that's both in the inner city and the broader metropolitan region as well. And obviously when you get low vacancy rates, you get rental growth as a consequence. The interesting thing about this chart is that it grew very strongly in the lead up to the GFC, both across the entire metro region, but also the inner city as well. And the inner Sydney market has experienced more sustained growth in more recent years than what the overall city has become, which again is a reflection of the fact that it is subject to stronger demand, more people wanting to live there and therefore bidding up the price, the cost of housing, whether it be by purchase price or by rental price. I started off by talking a little bit about housing supply, and there's been lots of discussion over the last 5 years about Australia's apparent level of undersupply of housing. If you strip all of that back and get to the reality, it is that New South Wales, and within New South Wales being primarily Sydney, has been the epicentre of this apparent housing undersupply. Okay. The Australian housing market overall, when population growth was at its peak in 08-09, was judged as being undersupplied. Since that population growth has tapered off a little bit, that judgment's been reversed a little bit at an aggregate level. But you look at all the numbers and all the analysis, and Sydney still looks like it is undersupplied. The underlying housing target for Sydney in the last year was for 23,000 dwellings to suit the needs of its population growth. Remember, it was about 70,000. So 23,000 new houses for 70,000 new people. That's what was required, or ought to have been required. What actually was delivered was less than 18,000 new dwellings in Sydney in the last year. So new housing supply in Sydney continues to be restricted. And that's why we've got vacancy rates at sub 2%. People are making different choices. So that's, I suppose, the broad economic discussion, demographic discussion, that I think are important fundamentals to understand or appreciate for the important impact they have on property markets. Now I just want to talk a little bit about the spatial elements of cities and how they play out in the property markets. So we'll start with Central Sydney. Obviously Central Sydney is where the tourism sort of dollar naturally gravitates to, and it has all the high profile destinations within Sydney. It's a beautiful city in all its respects, but it's an economic powerhouse. Let's not forget that. A city, by its definition, is a place where people come together to trade goods, to trade services, to get a job, to satisfy their requirements. So Sydney, as a city, just a very central part of Sydney, accounts for 8% of Australia's overall economic output. That's a massive concentration of economic activity in a very small part of the city. Yeah, and as Stuart mentioned, Glebe is within 2 to 3 kilometres of that epicentre of activity. It's a home to a high number of businesses, but importantly, it also offers an over-representation or very high concentration of high order, high income jobs. About 40% of the nation's internet publishing and broadcasting workers in the media actually work in Central Sydney. 20% of the national finance sector comes out of Central Sydney. So that's important to understand from the perspective of property investors needing to find tenants. Tenants will want to go to places where they can get to work easily and it's convenient to their lifestyle. The central part of Sydney itself accounts for 1/5, 20% of the overall metropolitan activity in terms of job availability. So we talk about Sydney being the most decentralised city within Australia, but it still accounts for 20% of all the jobs that are available. And this chart just highlights, I suppose, where the main features or attractions of central Sydney are, and you know, the proximity to Glebe, Forest Lodge and Harold Park within that. It's something that I'll just leave up for a second. Within this broader discussion around Sydney, it's interesting when you start thinking about the inner west. You know, I'm an avid reader of various media outlets and increasingly reading the Sydney papers, and even at a national level now, the media only now seem to be picking up on this story about the inner west, even though it's been happening under the radar for the best part of the last 2 decades. Bit by bit, you can see the re-rating that has happened through the inner west, starting initially in Glebe, interestingly enough. And the way I see it is that whilst Glebe may not be defined as being part of the inner west, which goes out as far as, I suppose, Canada Bay and Leichhardt, Marrickville, arguably, Glebe is really at that junction between the inner west and the central city and city fringe. You know, it's got the best of both worlds in many respects, where it's got access to jobs, access to employment, access to services, access to lifestyle facilities, but it's got character. And that's the thing that stands out to me as someone from Melbourne. The inner west has character. It's got lots of functions and lots of characteristics that remind me of the inner north in Melbourne. Places that have been undervalued for a long time and now only beginning to come up on the investors' radar as places that are relatively undervalued. And that undervaluation is now beginning to catch up. This chart, if I can just quickly explain to you, imagine a league ladder. At the top of the ladder, you've got the best performing suburb or the highest priced suburb, which in last year was Bellevue Hill. Okay, so that's at 100%. At the bottom of the ladder, you've got Campbelltown in terms of house price. So you rank all the suburbs in Sydney across that spectrum, and Glebe now sits in the top 20 position within the ladder. Okay, so it's the 20th most highly prized suburb in Sydney. Okay, so in a percentile sense. But the really interesting thing is that, yes, it's highly regarded, but you only go back 20 years ago, and it was only middle of the ladder. So there has been this structural shift that's been happening over the last 20 years across the inner west. And you do this for all the suburbs in the inner west, and you see they all sort of flatline around here. But in the last 5 years, they've all moved upwards. And it's a really important dynamic indicator of the changes that are happening within a city. And I've done the same thing in Melbourne, looking at the inner north suburbs, and the patterns are, scarily similar. This chart just talks about the house prices in the inner west suburbs and suburbs surrounding Glebe. And Glebe has been an outperformer in the last 5 years. So much so that last year its median price actually shot past Annandale. Now it's probably a statistical aberration, but it's highlighting that the traditional differentiation between Annandale and Glebe is now largely disappearing. If you look at over the long term, how has the Glebe housing market performed relative to the broader Sydney and the inner Sydney market? It's performed as well as anywhere else, and in the most recent period actually been outperforming in terms of its consistent price growth. So on a 10-year rolling basis, at the moment it's achieving an annualised growth rate of about 7% a year in terms of change in its median house price as an indicator. So it's recovering faster and stronger than the other markets in Sydney, which represents again this structural re-rating that is going through. It's a positive re-rating. Rents tell a similar story. Big difference between the inner Sydney and the rest of Sydney in terms of rental pricing, which reflects the underlying demand and the desire of people to live closer to where the action is. I think it's simple as that. Rent growth has been positive, not going to shoot the lights out, but it's still there because of the limitation upon new supply. The other thing is, when you look at Glebe's population and where the population growth has been coming from, in the last 5 years, the highest rate of population growth in Glebe were coming from emerging family age groups, 35 to 44-year-olds who are finding Glebe an attractive place to be. Okay, so that's where the highest growth was, 1.5% per annum over those last 5 years. So to me, again, that indicates there's a shift going on within the population of Glebe. Okay, it's becoming attractive to a different age group of population. So there are lots of young people who move to Glebe when they go to university and they live in a crummy apartment. They get priced out. When they get a good job, you know where they go back to? They go back to Glebe when they can afford to. That's what this story is telling me. Very similar to the situation in Carlton, in Melbourne. But then you look at the same age group and you look at their earning capacity, and this is really interesting. That same age group, who have been the highest growing age group in Glebe, have a median household income that's about 40% more than, if my maths is correct, I should be more closer to 50%, higher than the equivalent age group across all of Sydney. So you're getting more people coming in who are earning relatively higher incomes. That's got to be a feed into a fairly dynamic housing market. And across all the age categories, Glebe's population is achieving higher incomes than you anticipate compared to the rest of Sydney. The other interesting anecdote, I've just done some additional stats. The average income, or the median income, of families who are renting in Glebe is $126,000. Okay? So these people who have the financial means to buy a substantial home, you would think, but they are choosing to rent. But then you overlay what the apartment supply is in Glebe, and those renters are living primarily in houses, conventional houses, in part because the commensurate standard of apartment supply is currently not available. If you look at the apartment supply in Glebe, it is generally characterised by older, smaller stock that's perhaps more reflective of the demand coming from university students who have found Glebe an attractive place to be because of proximity to the university. We haven't seen much supply happening in Glebe full stop, and we certainly haven't seen a lot of better quality accommodation being delivered to the rental markets in Glebe for a very long time. This chart is really interesting. If you look at cities across the world, we all hear that Australians are choosing different forms of housing. We're increasingly looking to live in apartments. So before you look anywhere else, just focus around here if you could. This chart tells us, or this axis tells us how big the city is. 4 to 5 million people in Sydney and Melbourne. Along the bottom, this percentage tells us the proportion of the housing that's in the form of apartments. Clearly, Sydney is Australia's most mature apartment market. 10% of all housing stock in Sydney is in the form of apartments, which is much better than what you see in Melbourne, for example, which is a bit over 3%, and Brisbane a bit under 3%. But then you turn to the rest of the chart and think, wow, for other cities around the world, advanced Western nations, Western cities, places like Toronto, Vancouver, Chicago, Los Angeles, they're all, the proportion of dwelling stock is all between 30 and 40%. So 30-40% of similar cities have housing in the form of apartments, which tells me Australian cities still have a long way to catch up to the form of housing that's broadly accepted by people, similar people in similar cities. There are going to be some differences because of geography and all sorts of policy reasons, but it's a lead indicator for me that over the long term there is going to be an undeniable greater acceptance of apartment living. It's an international trend. We're an international city and we're increasingly tied to the international economy. These are some really interesting numbers. If you look at the core apartment markets in Sydney, it tells a story that there was higher supply through the early part of the 2000s, off the back of the Sydney Olympics legacy. Strong housing market conditions drove apartment supply. That apartment supply really fell into a hole in the mid part of the decade and really hasn't recovered until we start seeing new supply come through this year and next. Okay? So this is talking about in the bottom blue part, we're talking there about the city of Sydney, which includes Glebe, but also the CBD, but also Green Square. The next bunch of suburbs are the inner north, as well as then we look at the inner east and the inner west. And the interesting thing about the inner west is that there's been a fairly constant level of supply going into the inner west, because there has obviously been an underlying level of demand that can be satisfied by new supply. The existing housing stock there wasn't up to the standard required by those people coming into that location. So I just want to take you down to what's happening at the moment and what's going forward in the next couple of years when we drill down a little bit further. This chart looks at the actual supply that has happened in the last 2 to 3 years in the black part at the bottom, and then the grey part of the chart looks at what's coming forward in the next 3 years. Just want to draw your attention to how different it is across inner Sydney, or the core apartment markets of Sydney. Within the city CBD, there's a modest level of supply emerging. Within the city fringe, there's a significant level of supply emerging. But when you look at where that supply is actually happening, it is primarily in Green Square and other places other than in Glebe. Really, Harold Park, from all the numbers I've seen and all the research I've done, is the only place where we're seeing new apartment supply occurring in Glebe to satisfy the underlying requirements. You've got a fair bit happening in the inner west after a long period of inactivity, nothing in the north, virtually, but a high level in the inner west. Now this is to reflect the level of activity that's occurring in places like Rhodes and Breakfast Point primarily. Okay. So these are some interesting statistics when you look at supply. There's obviously most of that stock is being sold and being sought after by purchasers. The big line at the end represents the rest of Sydney in aggregate. So there's just some interesting statistics that you can take away and think about. And when you roll them all up, you think about Glebe and how that fits within the context. And my summary would be that Glebe is perhaps one of Sydney's most livable suburbs. To me, it really represents a village lifestyle within one of the world's most livable cities. Okay? It's pretty close to CBD, where you've got all the action associated with jobs and lifestyle and connections. It's got all the attributes that Stuart was talking about in terms of local amenity. And there's a really important point here, is that Glebe as a suburb is a very desirable place to live, because the legacy of heritage buildings that have been preserved over the years, for example, the gentrification in the 1970s happened off the back of the green bands and the sort of movement to preserve that heritage building stock. Within Glebe, you've already got all the community infrastructure that's required to sustain a population. You've got the libraries, you've got the childcare centres, you've got the schools. You don't have to wait for them to be built. And there's a real mismatch between the types of apartments that are currently available relative to the types of apartments that residents would like to live in. Okay? Whether those residents are owner-occupiers or renters, it doesn't matter. They both have sustainable, supportable incomes to support the rents that are required to justify that better quality of housing stock. And the reality is there's virtually no other site in Glebe, or no other sites apart from Harold Park, where we can see new private apartment development emerging, over the medium term at least. So from that perspective, I think there's a whole bunch of macro reasons to think that Sydney is performing well and has a positive outlook, as well as a number of micro factors that support the suburb of Glebe as a place to think about property investment. So on that point there, I might hand back to Stuart. Thanks for your attention.
Thanks, Rob. Look, I'm going to wrap it up pretty quickly. There's plenty of food and drink for people to stay around. If you've got any questions in relation to the project, Mirvac personnel have got the blue name tags on. If you haven't already, please go and have a look at the 2-bedroom display apartment to get a feel for the product and the quality of the product that we will be delivering here at Harold Park. So thank you, and have a good evening.